got on my left Tim Rozanski, correct? Rozanski,
You got
uh,
it.
co-founder and senior vice president of sales at Pidgin. Welcome.
Thank you, Sarah. Thanks for taking the time today.
Absolutely. And on my right is Trey Ragland. He is the product development director at Corporate America Credit Union. Good to have you today, too.
Yeah, good to be here, Sarah. Thank you.
Absolutely. Now, I'm going to let each of you guys go a little bit deeper into your own personal introduction as well as the company's. Um, Tim, why don't you go first?
Yeah, gladly. Thanks, Sarah. And my name's Tim Rozanski, one of the co-founders here at Pidgin. So I run our sales organization, which includes our direct sales team, along with partnership sales and sales support.
Okay. And can you talk a little bit more about what Pidgin is doing in the market?
Oh, gladly. So Pidgin, we're laser focused on all things faster payments. So of course that includes things like connectivity to FedNow and RTP and an on-Pidgin network and so much more that I think we'll talk about this
I'm
afternoon.
sure. Yes, thank you. That's awesome. So such interesting stuff going on in that area. And Trey, how about yourself? Talk a little bit more
Yeah,
about you and your corporate credit union.
sure. Yeah. Trey Ragland. I'm the product development director at Corporate America Credit Union. We're based out of Birmingham, Alabama, but we have roughly 500 or so credit unions across the United States, from California, all the way to this side, to the East Coast side, and offering services to credit unions, from payment services to liquidity, with lines of credit and having additional liquidity, investments, also innovating on products as well that fit different use cases that we try to fit from the credit union feedback. So we try to build things based on the feedback that they provide and the burdens that they have.
Yep. Always great to be responsive to your members. Now, so I'm going to start with Tim first. How are instant payments changing the competitive landscape, and what risks do credit unions face if they aren't adopting these, capabilities?
Yeah, it's an important topic. What we see in our experience is that instant payments are giving small and mid-sized credit unions the ability to really compete with larger credit unions, but also with banks, even with the emerging fintechs that are actively pursuing retail and business members. The risks of avoiding or delaying adoption really it can be an inability to compete or ultimately to stay relevant with your membership, leading to an inability to serve your members, right? Should keep in mind as well, members can have pretty high standards. So for example, they expect a high degree of service from any credit union, whether they're big or small. And at this point, they also expect a strong technology offering to round out the member experience.
Absolutely. Your turn, Trey?
Yeah, I mean, I can echo a lot of what Tim said. We are similar in that regard. Our tagline is to collaborate with credit unions, ease their burdens so they thrive, right? So that is constantly changing. Instant payments, faster payments are always a part of that, especially when it comes to remaining relevant in the banking or credit union industry. You just think about reputation risk of not being, so to speak, in the game on some of these instant payments or on these rails at a minimum from a receive only. That is, we're all trying to drive and make sure that we're offering products and services to the next generation. And I think, you think about it with trends and things that are out there, information that's out there, these younger generations, the next generation, they'll leave your institution if they can't do some of the things that they're wanting to do out there in the fintech space or these wallets that are out there. And we need to meet them where they are. So that is the fight to remain relevant, like Tim said, is ongoing. And we start with education, because this is still relatively new, especially on the FedNow side. And so we've spent a lot of time on the education front, educating our credit unions on what it means, how it's different from legacy payment rails, and then trying to find easy wins, easy use cases to implement it into their credit union.
And so, yeah, you guys mentioned FedNow and RTP. From a credit union perspective, I'll start with you, Trey. What are the strategic considerations in choosing these networks, and do most institutions need both?
Yeah, it's a great question, Sarah. It comes up all the time, so we do, as part of those education, we do payment strategies with with credit unions across the country. This comes up every single time. Which one should we do? Especially when FedNow came out, it was like drove a lot more interest just because the Federal Reserve's involved. Right? It carries
Right.
a lot of weight, right? But RTP's been around for a long time, also. So our opinion, our strategy has always been that credit unions should do both. But the reason is why. So I think the answer is simply you would not want to have a scenario where a credit union member is on one, that credit union is on one platform or on one rail, and where they're sending it or where they're getting the payment from is on another, and it doesn't go because it's not interoperable, right? So it's going to go ACH. So you need to be on both. Whether or not you decide which one that you prefer over the other with smart routing, completely up to them. But to avoid what I just said, both sides of the transaction have to be on the same rail. So
Right.
you want to get into a scenario where, one side's on one and you're on the other, and guess what? It's going to go ACH or even card or whatever. So that's our strategy. It's always been to participate in both rails.
Mm-hmm. Tim, what do you got to say about that?
Yeah, Sarah, it's a question that we get a lot as well, almost every day. Something to consider is, well, the number of total financial institutions on FedNow now exceeds RTP. We're still seeing more transaction volume over RTP. I think ultimately we'd anticipate that they'll roughly even out as faster payments landscape continues to mature, but time will tell. But to better directly answer your question, when we're asked, we typically suggest utilizing both networks, but ultimately it's the credit union's choice, and our technology is flexible enough to allow one or both, or even to modify your strategy at a later date if needed. Just keeping in mind as well, I suppose, to put a bow on it, having a settlement agent like CACU really does help to iron out some of the complexity of adopting. So in conjunction with Pidgin and CACU, onboarding, paperwork, those type of things all get handled with an extra layer of care, which can take out some of the burden of the decisioning.
Right, for sure. And so what are the use cases that credit unions are finding most valuable? I'm sorry, I'll go with Trey first.
I'll go. We talk a lot about trying to, have a strategy in place. Start with receive only. It's the easy win, right? Start with receive only. There's no front end that you have to have in terms of, an application or anything like that. I talked earlier about meeting those members where they are. Well, they're out there on these digital wallets, you name it. We've done a lot of research, and you can do this. Also, you can see it on your ACH data. You can kind of see what volume that you could project by seeing cash outs in some of these wallets, which we've done that from a market research perspective. But they're out there on Venmo, they're out there on Cash App, and some of the sports gambling apps, and Uber, all those gig economy, I guess is what I'm trying to say. They're all out there, and that's an immediate win, is to be able to allow the members that are on those apps to be able to cash those funds out immediately. And we've also done research on how many people will pay the fee to have those funds cashed out immediately, and it's more than you would think. It was actually astonishing, the number of people that use that functionality. So that's an immediate use case. Once you decide to turn on send, I think it opens up the door. It also opens up the door for risk, which we might talk about later. I'm not sure, but when you start sending, you think about maybe your business accounts and being able to manage cash flow and increase their cost of funds on things with accounts payables or things, invoices that they're paying. But receive only, meeting them where they are on the digital wallets is an easy thing to turn on with no product in place. It's going to come directly to your deposit account at the credit union just by turning it on.
And Tim, what are you hearing back from clients? Is that the same thing? Is the most valuable?
Yeah, I think, Sarah, great points made by Trey. I think transacting in real time or near real time can really bring an overall quality of life improvement for retail members, for business members as well, and then also for the credit union staff as a whole, right? Who's ultimately supporting their members. You think about receiving faster payments and what it can mean, and Trey mentioned earned wage access, right? Uber, Lyft, Grubhub. Those transactions now go directly to the member accounts via RTP, right? So that's huge. but then sending as well once folks are ready. Having a tightly integrated, full suite of functional services for retail and business members, it's a big deal. But I think also we'd be remiss not to mention FEMA. So the Federal Reserve announced very recently that this month, some participants of the FedNow service started receiving instant disaster relief disbursements via FedNow. So it's very important news from our point of view, something that I think would be a mistake not to think about.
Yeah, yeah. And Trey, you touched on it a bit ago. What are the risks of credit unions implementing it then? What are the kind of security things they need to keep in mind?
And this comes up all the time. I mean, from a receive perspective, these are guaranteed funds. So from a receive perspective, there's not as much risk involved as you might think. Now, account takeover, things like that from the the sending side that's coming in definitely is a continued risk, whether it's on this rail or any other rail. From a sending side, you're going to want to use a lot of the same tools that you put in place for other payment rails, setting limits. You're not going to give a brand new member the same limit as you might give a business account, things like that. You can and that's where Pidgin's really good with being able to set limits and customize different authority levels, or amounts that can come in on the actual membership base. So, same thing that you would do, there's a liquidity risk involved with send, having the funds up front, since it's a guaranteed funds network, having the liquidity up front at the New York Fed for RTP, and also your master account with the Fed, with FedNow, which a funding agent or a correspondent, a settlement agent could help you with that. But those are all things that you want to discuss and consider in your strategy and risk assessments.
Anything to add, Tim?
You summarized it really well. I suppose I would just add that we're not innately a fraud mitigation platform or tool. That's not what we specialize in. We solely specialize and focus on faster payments. That's why we exist. But we have built relationships and work with several third parties for folks that want a really, you can call it a Cadillac version, a really sophisticated fraud mitigation tool. So there's a good chance that we might work with the credit union's existing tool already. We may have already integrated it. And if we haven't, really, we more or less have the playbook at this point to make that happen in the short term.
And so how are credit unions positioning this? Are they positioning it as a member benefit? Is it a revenue generator? What else?
Yeah.
What is it?
Yeah, it's honestly, it's across the board. But I think you could make the argument for a lot of different areas, a lot of different business units, Sarah. When you talk about liquidity, that gets the CFO's attention and the folks that are in treasury attention by being able to improve liquidity on the receive side, not being able to hold these funds back from being able to come in instantly on these wallets, or maybe it's even an insurance payout, or now, we're seeing FEMA payouts, come on FedNow. These are coming in instantly. So you wouldn't want to hold up liquidity for that. Obviously you can use that for cost of funds, turn around and make investments out, whatever, funds are coming in faster. But you could also make the argument on the member experience side, improving a better experience. Like I said earlier, about meeting the members where they are. It's not always about your systems and your digital banking and your website or app. That's definitely important. But like I said earlier about these wallets, they're not in your systems, but there could be a negative experience that they think of you as the credit union if you can't, if your account's not able to hook up to it, or certainly not on one of the networks to get the money out. That's what they really want. And that's not going to be the fintech's fault. That's going to be, obviously the infrastructure behind it, which is being on these networks. So that's definitely a member experience it's not, within your four walls that we need to all be thinking about.
Yeah, thank you so much. And so getting on to the ROI, everybody wants to know the ROI. Tim, why don't you start? Where are credit unions seeing as the ROI in this investment?
Certainly. And really, we're of the opinion that credit unions benefit from looking at this, not necessarily through the lens of ROI initially, but really simply just understanding what you're losing if you're not live, at least receiving payments in the near term. It becomes about avoiding the deposit bleed and ultimately driving deposit retention and growing the membership.
Yeah, I think from the receive side, your ROI is going to be on, your balance sheet, right? It's the liquidity that's coming in, and it's the cost of funds. When Fed funds, were zero, maybe not so much, but we're not in that environment anymore. There's
We're
an actual number there, so it matters. So you could, if you really wanted to drill down to it, you could look at all these cash outs and tie Fed funds to it to a minimum, for a day's worth of interest and get your money. It's more on the balance sheet side, but from the send side, I think you definitely have ways to monetize it from, especially on if you're a credit union who has business accounts, and being able to provide them that benefit of being able to hold on to their funds longer to the last minute to make accounts payables or payroll or whatever it may be,
Yeah.
to be able to keep that money in their account while they're earning interest. And that's a benefit. So I definitely think you could charge for that. And what that looks like, I don't know, but I think the market will dictate that over time, as it does with everything else. But that's what I've seen so far. Receive side more on the balance sheet, coming in, liquidity benefit, which is ROI, and then if you want to monetize on the send side, that's available too. So
yeah, I know as businesses it's valuable, and we're used to paying fees. So
right.
So Pidgin right now has 100 financial institutions on your platform. What is the percentage of credit unions versus banks, and is there a different patterns between the two as far as using it for what, that kind of thing?
Another question that we get pretty often, Sarah, thank you. Right around that 50-50 split or so of credit unions and banks, just give or take. What we do see is a lot more commercial use cases from banks typically, and we've seen a stronger focus on the retail member experience for many credit unions. We can also maybe talk a bit about new payment strategies. Trey, I don't know if you'd be comfortable talking a bit about what you've seen with the Rise platform.
Yeah, outside of obviously our strategy with RTP and instant payments, we have collaborated and innovated alongside with Pidgin on building a loan payment product that we call internally, we market it, called Rise, with Pidgin. And it is essentially for credit unions to be able to offer and accept loan payments via ACH card. We're also looking at the request for payment side on the instant payment rails too. We haven't gotten there yet, but that's definitely on the roadmap to consider. But there's roughly 50 credit unions on that utilize that product just for, improving member experience. I have an auto loan here. I need an easy way to make a payment at that credit union. That's what this does. It's a web-based product that, they can choose ACH or card. They can set it up on recurring. We're taking in all the loan information so they can, have a good user interface and be able to see their loan, pick their loan, and ultimately make their payment. Leveraging same-day ACH, so it definitely is a faster payment solution. Card, obviously, from a settlement perspective, is next day, which is card, and I think there's a use case there to merchant processing is definitely a big use case for instant payments too, because traditionally that settlement comes in via ACH in the past. So I think there's ways to speed that up also, but we've had this product in place for maybe 5-6 years, Tim, that we built from the ground up. We're constantly enhancing it based on feedback from the credit unions, and it's been a really good product that we've rolled out.
Yeah, sounds good. Anything to get money faster around. And so how does Pidgin integrate into the core systems, or does it need to? What's the typical implementation timeline look like, and for, let's say, a mid-sized credit union?
Sure. So we have API integrations for approximately 17 core platforms today, give or take. A lot of the common names that might come to mind when you think of core platforms. One of the things that really helped us gain so much traction so quickly initially is core integrations were part of our original go-to-market strategy from day one. So it's not an afterthought for us. It's something that was critical all along the way. We made those investments early on, and now we have several that can essentially come off the shelf, so to speak, when bringing on a new customer. With regard to implementation timeline, so let's just say for a mid-sized credit union on Correlation or Scimitar, as an example, it might be 30-60 days or so for the core integration to be certified for send and receive on both networks.
Okay.
Yeah, I can speak a little bit to the, on the onboarding for And we're also a part of the onboarding. If they want to use Pidgin and us for the settlement, we kind of tackle that as a team.
Okay.
If they're working with Pidgin and us together, certainly they can choose where they want to go from the settlement side. But from the funding agent side or correspondent side with the Fed for settlement, we've got a pretty easy onboarding. It's just setting up an account with us. We use a sub account to their operating account, so they're not intermingled with their other payment rails. So if they have RTP and FedNow, they'll have their own account for each one of those.
Okay.
These payments come in individually, not batch. It's one of the big differences between ACH and instant payments. So that was our approach at the beginning, was just not commingle them. Maybe we do in the future, who knows? But so far, it's been keeping them separate in their own accounts, easy to reconcile back to their Pidgin or to their Pay Center if it's a Scimitar, or their payment hub, wherever they're at on their core, and being able to reconcile those on a one-to-one basis back. But that's just a matter of, basically, if they're not a member of us, we onboard them as a member and then set them up with an account, a sub account for that. If they're going to be sending, we'll look at their overall ability from an exposure limit, on send. So we might set them up with a line of credit, might not if they already have one in place. Just kind of depends on the relationship at that point. But this is all done very quickly. Can be done in a week or so from setting up the funding side of things, or the funding agent side.
Yeah, quick for sure. So I always allow my guests to have the final thoughts. Let's go with Tim first. What would you like to leave our credit union executive audience with?
Well, Sarah, I know the impetus for this conversation originally was our 100+ customer announcement. That's something that we are extremely proud of. We just, when we saw the signs several years ago now at this point, that the faster payments landscape was emerging in the US, and it just seemed like it was going to be too big to ignore. So we poured a ton of effort and energy and resources into building a product that's really pretty special. I should point out that our partners like CACU, some of our core resellers like Visify as an example, they also poured a ton of effort and time into this thing. Ultimately, we're not surprised to be over the 100 customer mark, but I will admit that it happened a lot sooner than we were originally anticipating. That's a good thing. Yes. And I think while the adoption of faster payments in the US is going strong, it still feels like there's just a ton more potential to unlock in the months and years ahead. It really just feels like we're still just scratching the surface at this point.
And Trey, take us home.
Yeah. So I would say, don't be afraid to start something new like this. It's nothing like a core conversion or anything like that. So from a resource perspective, at least for the getting in the game on the receive side, get educated on it first if you're not already, and then consider hopping on the networks, both networks as receive participants. Find good partners. We've got one here on the screen from a technology perspective. Pidgin's a great partner. Look for partners that are going to innovate with you on use cases. This is what partnerships are for instead of vendors. So find partners that you can innovate with and collaborate with. And if you want to build product out and things like that, definitely collaborate with these partners on these use cases. We're still kind of in the early stages of this, even though RTP's been out for 7 years or so, but we're still, on the early stages of instant payments. And I think the use cases are going to continue to expand. The volume is going to continue to expand. So, get on the networks, get educated, find good partners, just like we do with everything else. And I think that's the best thing that you can do. Yeah,
I love the distinction you made about partners versus vendors.
Yeah.
Love it. All righty. Thank you so much, gentlemen, for your time today. Thank you. Appreciate you being here.